Episode 579, Trading Justice Podcast. Justice Brothers coming at you. My brother Matt, hot off a great event in which he spoke about AI. It was on Thursday. Matt, I thoroughly enjoyed the panel. I enjoyed your presentation. I learned things. That's what education is all about, right? That's why individuals listen to this podcast, right? The continuing, desire to make yourself, the best investor, best trader you can. You spoke about AI, Matt. Talk about that a little bit. It was a great event.
Yeah, I had a lot of fun at the New Tools and Money event with Sugo Capital this previous Thursday morning. The link to watch the event is in our Tackle Trading Discord. And if you need that, you can always hit us up in our Discord channel as well. But if you're just interested in learning a little bit about the AI space and you want a guide that you want to download to really understand the AI marketplace, you want to get a list of stocks broken up into different tiers, tier 1, tier 2, tier 3. I put together a beginner's guide to investing in the AI space, understanding the AI marketplace, and we call it the AI gold rush because we have a growth-based argument over the next 10 years that the direct and indirect influence of AI is certainly attaching a growth condition to the market that we really haven't seen play out in history to this type of degree. In fact, I made the argument that one of the reasons why the market is at all-time highs, despite the fact that the Fed has raised interest rates 550 basis points, despite the fact that we're going through an inflationary saga that is very similar to what we went through in the 1970s, despite an economic condition that at best you could describe as lukewarm right now. Markets at all-time highs, and markets at all-time highs, gold's at all-time highs, but specifically with the marketplace, it's understandable why gold's at all-time high, given everything that I just said. But it is a little bit shocking to people when they think about the market at an all-time high, given the problems that we are dealing with in the U.S. economy in general, inflationary specifically. And one of those reasons is because of the growth argument out of the AI space. When you look at Nvidia, for example.
Right, and it's not just one of those, in your presentation, you're like, this is the reason, right? Like this.
Well,
this
I do think it is the number one reason the market is at an all-time high. And if you just want to look at, just take one stock, for example, Nvidia. Nvidia reports earnings this week. It's going to be a very, very important earnings report coming out of Nvidia. And the simple reality is, if the market's going to break out and run, it's probably going to be on the backs of a really good report out in Nvidia and the market embracing a growth argument out there. And it doesn't take a lot to understand the importance of Nvidia. You can really kind of look at it just from an earnings perspective. Last quarter printing $5.16 EPS mark. If you go all the way back to 6 quarters ago and you get a little bit more time frame when you're looking at kind of this storyline over the course of the last 6 quarters, you went from 51 cents to basically $5.16. You've had massive growth in that environment, and every single quarter it gets better for Nvidia. And so from an EPSB perspective, from a guidance perspective, the last 6 quarters of Nvidia has been absolutely stand out. And it's honestly, in my estimation, the number one reason why the market has been able to withstand some of the punches that's been thrown at it in the last little bit, especially on the inflation and the economics side of the equation. So, in my estimation, it's very important to understand the historical condition of it. But I believe we're at the very beginning of this. I think this is a 10-year saga. I think it's going to be extremely important to understand this specific area of the market. And so I decided to write a nice little PDF, and it's a beautiful PDF.
Okay, make no mistake, it is not a little PDF. If you sign up for this, you are getting some good quality, in-depth, take a minute, absorb information, right? Yeah,
I've done a lot of research on this space.
There you are,
Read a lot of
downplaying yourself, and
newsletters.
here I am having to pump yourself up for the work. I mean,
Listen,
I'm getting used to it.
people will see the quality when they download it. I don't need to pump it. So,
Well, I will pump it.
I appreciate that. But tackletrain.com/AI-stocks is a link. It will be in the description on both the website and YouTube as well if you want to check it out.
Yeah, no, so definitely check that out. And Matt, in the newsletter, you've been a busy man over the last few days. You wrote about the technical situation that we are heading into the week with, right? Bears got punished. We made some really good calls during that stretch. We've had a very nice little rally. We're at all-time highs. And we're heading into a week, and we'll talk about inflation here in a second. We had some inflationary data come in, but we're coming into a week light on catalyst, absent one, which is Nvidia Wednesday after the bell. Talk about the technical situations as we head into that. What are some scenarios that can play out and some potential outcomes?
Yeah, I did write about this in the newsletter this weekend. So tackle pros out there, definitely read the newsletter. It will certainly get you up to speed on every condition in the marketplace and make sure that you are that individual that stayed at the Holiday Inn when it comes to the stock market and the commodity spaces in general. But, I decided to talk about the all-time high price action in the newsletter because obviously there's a lot of talk out there. Dow's all-time high, NASDAQ all-time high.
Oh, they love those headlines, right?
High. There's so many all-time highs out there, and I talked about the conditions that create the what I called the retest of the all-time high, and I wanted to understand the degrees of patterns as a technician. I wanted to understand the patterns that typically do emerge when you're going through a retest of the all-time high. And I didn't want to look at, just you're in a consistent trend and, like the market goes up, sets a high, retraces back down into support. I didn't really want to just look at those. I wanted to look at situations historically where you've established a firm all-time high, the market is pulled back from that all-time high, and then whether it's 2 months later, 6 months later, 2 years later, at what point do we retest that all-time high? And what patterns emerge when we typically do the retest of the all-time high. And what I found in general, and I'll save the deep analysis to the newsletter there, but what I did find in general is it's not a clean slate above resistance here. What I did find in general is that oftentimes you have a condition where the all-time high is here, up a little bit above the price action, and the market just embraces this concept that they're going to get the all-time high. It's this self-fulfilling prophecy. So regardless of the technical...
In fact, I remember you on a podcast recently saying, I think it was even last week, well, this, market wants that, right? Like,
well, yeah, there's, I 100%, we see it all the time. You talk about when a stock breaks out of 90 and we make the joke, it goes to 100, 100% of the time. There's magnets in the markets, and
magnets is a great word for it.
Psychological, components to the behavioral analysis. And so, yeah, in my estimation, once we did get that double confirmation on the daily and the weekly timeframes, which we talked about over the course of the last couple of weeks, the weekly time frame really held firm against the 20 weekly moving average. The weekly time frame confirmed against that pullback 2 weeks ago. The daily chart confirmed at the end of 2 weeks ago. And so over the last week and a half, the market has just had this philosophy that we are going to test that all-time high. We are going to get that all-time high. And the magnet is up there. And then all of a sudden, you got algorithms, but then you got these behavioralisms on top of it. And what occurs here is the market starts discounting some of the negative information because they cannot see anything other than what's in front of their very eyes. And that's that all-time high, or that's that significant whole number, or that's that overriding massively important resistance zone. I see it in a few different conditions, not just a retest of the all-time high. But in general, what you do see is you see the market get into that all-time high, you see the news media start pumping all-time high, all-time high, all-time high, all-time high. That starts getting out there in the lexicon of the financial markets and starts getting into the retail side of the equation. But what else occurs is you start to see profit taking as you start to get into that all-time high because you're overextended going into it. And so you get overextended as you go into that all-time high. And typically the market does not break and run very aggressively. In fact, the majority of the time, you go through a little bit of consolidation, get dialed in, and then you basically break out down the road. Now, I will be the first to admit that in these conditions, you're talking about pullback analysis, which typically means you're talking about some nasty economic situations. The last time we did this was 2022. We had another one in 2020. That was the pandemic and the misstep on the transitory language. You had one in 2018, 2019 due to the trade war with China. And then you had the Chinese market imploding back in 2015, where you had some case studies in similarity. In my estimation, the most likely scenario is consolidation here. But I do not believe that consolidation is anything like what we saw in those case studies. I think it's short-term consolidation, alleviating some of the overextended pressure, similar to what we saw last week with RSI. And then you basically look at some degree of catalyst to propel that next movement in the market. And to me, there's only one catalyst this week that we need to talk about, and that's Nvidia's earnings.
Yeah, I mean, you stole my joke. It's just like, you need a catalyst. Well, let's look at the calendar and see what might serve. Oh, I don't know, the number one stock in the market that has served as the bellwether general of generals. And sometimes the story writes itself, doesn't it?
Yeah, I mean, when you're looking at the earnings landscape this week, it's not murder's row of massively important companies this week. We had that 3 weeks ago. This week, it's really about one company, and that's Nvidia. They report on Wednesday after the market. And so I think you can look at a scenario going into this week where you basically have not a lot of data coming into the market on Monday, Tuesday, and Wednesday. And all apologies to Palo Alto on Monday, because I do think they're an important report, and apologies to Toll Brothers and Macy's, because again, they're probably a fairly important report for their specific industries. And apologies to Snowflake and Elf, Target and TJ Maxx and Analog Devices and Synopsys on Wednesday. But you're just not going to be important when it comes to Nvidia on Wednesday. And so there's important reports this week, as there are every single week, whether you're in earnings season or you're not in earnings season. For example, last week in earnings, it wasn't exactly the most anticipated earnings week, but you know what you had? You had Walmart Monday, Applied Materials, On Holdings all come out with really, really good beats, really good earnings analysis coming out of there. The blended growth went from 5.4% up to 5.7%. And then on the downside, you had Deere & Company had a little bit of a negative report on Deere with the drop of guidance, and that had an impact on the industrial space, which basically kept industrials down while the rest of the cyclicals were doing pretty good. And so every week's going to have some earnings that are important. Some weeks are going to be far more important than others. This week, you don't have a lot of components in the S&P reporting, but you do have a few, and it starts with Nvidia. And in my estimation, I think this market looks pretty dialed in to kind of go through a little bit of consolidation. For example, Coach Greg, I didn't even talk to Coach Greg about this, and he wrote about the Poor Boys Covered Call in the Traders Report this week, because he felt like that was a better strategy to kind of look at the beginning of the week because of the overextended conversation. And so I think we're all kind of looking at the same thing here, in the sense that whether it's, Greg called me up and he said, Matt, you and I might take different paths to get there, but we kind of get to the same level of analysis. And I'm like, I think it's because regardless of what anybody looks at, we have a lot of respect for the all-time high. Big congratulations to the S&P for achieving an all-time high price this week. But we also have deep respects for the technical conditions and patterns that play out in history. And the patterns that play out in history do suggest a little bit of consolidation. Every market's going to be a little bit unique. And in this market, I think what you're really kind of looking for is just a little bit of consolidation, not weeks or months, a little bit of consolidation this week in front of Nvidia. And then the best technical backdrop going into Nvidia is 3 doji candles with a breakout following Nvidia's report. That is the best technical setup that we could see this week. We'll see if the market decides to front run that, or give it the cautionary tale and wait for the actual numbers. I'm going to be a little bit of the cautionary tale, waiting on those numbers coming out on Nvidia. But I fully expect a good report. I fully expect guidance going up. I fully expect beats everywhere on Nvidia. But if I fully expect that, what do you think Wall Street expects? The same thing. It's going to be, how good are you, and how good does this look from a guidance perspective down the road? What Nvidia cannot do is report anything negative on the guidance side of the equation. If they report anything negative on the guidance side of the equation, we're talking about a market that's going to give up a little bit of the price action over the last 2
Now, you're going to give up a lot of the price. Like, listen, I fully expect a positive, report, because, I'm going to bet trends always, whether it's a football game.
The last 6 quarters of Nvidia is strong.
If Kansas State has not covered at Nebraska for, the last 5 games, I'm not betting on Kansas State, right? I'm going to look at the Nebraska side of the equation. Nvidia likely comes in. I mean, if it doesn't, we're having a different conversation, right? It doesn't.
Well, if it doesn't, you're going to lose a little bit of the growth shine to the market, and if you're going to lose some of the growth shine, you're going to have to focus on the reality of the economic and the financial conditions out there. So, I mean, growth arguments can make ugly economics, put it into the back rear view mirror a little bit. But once you give up that growth argument, it's hard to get it back. So, no, I fully expect a good report out of Nvidia. But again, markets can be fickle around earnings sometimes. And so I think it's important to see Nvidia. And I think it's easy to look at the market and say, congrats to the market for the last 2 weeks. Good all-time high price action. The bulls have been in charge. And it does look like the bulls will continue to be in charge as of right now. But again, overextend. If the market wasn't overextended, I wouldn't be as cautious about Nvidia's report. But with the market overextended, with the market at resistance, with that resistance being an all-time high resistance, same can be said about Nvidia. I think you got a little bit of a high bar expectation here.
Yeah, I know, and I love this conversation, because you can be bullish, but it's about strategy selection, right? That oftentimes differentiates who, just the practical, how well you do. Greg, directional type traders, poor boys. I know I personally have shifted to more naked puts than direct ownership of things. Still bullish, right? You sell naked put, that's a bullish play, but more conservative, right? And we'll see.
Well, you're giving up return for probability analysis, and that's what option strategies allow you to do. And so, like Coach Greg, I loved his write-up because he was talking about, hey, we're at all-time highs. We should go out there and go rip roar with the long calls, right? Not so fast here, my friends. Let others go and rip roar with the long calls here. And so when you have the education from an option strategy perspective, it's not necessarily about adjusting your bias or your portfolio, but about adjusting your strategies a little bit. And that's when, for example, you get into, naked puts instead of long stock, right? I'll get into covering stock instead of opening up risk graphs.
Yeah, we all have our twist on it, right?
Yeah. And so, but again, I think in general, we're all just looking at the same thing. Slightly overextended at an all-time high with a catalyst in front of us called Nvidia. Which, again, it's not just us talking about Nvidia. When you look at the blended growth number, there is not a company that sniffs the importance of to the blended growth number of the entire marketplace than Nvidia does. Tech's rocking, I think, like at around 33% growth right now. Mark, if you discount Nvidia's growth, they're rocking at 10%. The market's not at an all-time high. without Nvidia's growth. It's just not. And the Nvidia's growth's not at an all-time high right now if it isn't for AI. And so you put two and two together. The importance of AI is
and it's just not the raw numbers, which by themselves you wouldn't be at an all-time highs. It's the general leadership sentiment, the confidence in buying dips, it is such a cornerstone, right? It is such a cornerstone. So obviously the event of the week, right? The event of the week. I'm not going to be short. I don't have any bearish real positions on. Don't plan on putting any on. If Nvidia doesn't deliver, I'll reconsider that. But it's more of how do I tactically play the bullish side? It sounds like that's what everybody's mindset is.
Tactically play the bear side. I think you should get some bear hedges going into Nvidia, quite frankly. There are some pristine bearish technical setups out there in the market, and if you wait till post Wednesday, you don't have anything. I'm sorry. I think you got to have a hedge going into Wednesday. So
take a little hedge, and
never honestly, terrible advice. Go look at the traders report for the pros that tackle trading. There are some really, really good bear setups out there.
There are,
and quite frankly, they're in go or don't setup. So if you're not looking Monday or Tuesday in a go or don't setup, you're not going to get it by Wednesday.
Yeah, Matt, Nvidia is going to be the story of the coming week. Inflationary data and meme stocks were the story of this past week. Let's start with the real data. Oh, no offense to GameStop and all that. We'll touch on that here in a second because it did steal some market headlines to start the week. But we had inflation week. We had both the PPI, we had the CPI come out. Give us the raw numbers. I think you and I generally have the same take from it. Sitting here recording the podcast today. But break down the numbers.
A rare situation with the PPI and CPI report this week, where PPI was in front of CPI, and that was fascinating, given the fact that nobody cared about PPI on Tuesday because they were all anchoring against CPI on Wednesday, including myself, and I'm certainly yourself as well. Because you're not going to have too strong of an opinion over one inflationary report when the much, much, much more important inflationary report is literally within 24 hours.
Want to make the PPI never matter? Put it in front of CPI every month.
In fact, I think the central bank might have figured something out this week.
Like, if you want that to never matter, put it in front of the CPI every month.
Like, at least when you're having the inflationary conversation, right? It's true. It's true. Which was fascinating to me, Mark, because the PPI report on Tuesday, if you were to tell me that we were going to get a 0.5 reading on PPI with an expectation of a 0.3 reading, where last month would be revised lower, but again, the headline number comes in at 0.5 versus 0.3, I would have told you the market should have sold on that. And the market didn't. In fact, when you go to the market itself and you look at kind of the market on Tuesday of this week, and you look at what the market did on Tuesday, market had a hammer candle on Tuesday. Now, it initially did sell on Tuesday. The algorithm response was accurate. It did sell initially, but Mark, that 0.5 increase on PPI was just enough to get it to sell to the 9 EMA on the daily chart. That's nothing. That's legitimately no volatility there. And then you finish that day with the candle all the way to the top side, which means the market discounted it completely 100%. And so for me, I don't know how you can discount a 0.5 reading despite the getting revised last month, getting revised lower. I don't think you can discount that. That's an important metric that we need to track, but the market certainly did. And then the market on Wednesday, they got what they wanted. And that's about as accurate as I can say it. The market wanted a miss so bad that it didn't matter the context around the miss. It didn't matter what any other number represented here. If the market got a miss,
they wanted a headline miss.
They wanted a headline miss, and they got it. They got a headline miss, 0.3 versus 0.4. Now, I don't think we should celebrate at 0.3% month over month, which equates to 3.6% year over year, which is right where the numbers are right now. I don't think we should celebrate that as a, oh my goodness, we're back in the deflationary trend here. No, we're getting, what you're really seeing is the extreme stickiness of the 3% playing out over time. And what you're really seeing is the Fed doing their absolute best to get the entire world to embrace the 3% number over time. And I think we in the Trading Justice podcast, despite what the market does with this information, we need to be fully aware of that, because on these types of numbers, man, however the market wants to behave around that in the short term is one thing, but gold is, and the precious metals market and the industrial metals market, they're telling the truth of the inflationary saga right now, and all of them are up right now. Silver is out of this world good right now. And so to me, PPI beat, CPI miss. I think you're looking at a net wash this week from an overall inflationary perspective. I don't think this week changes anything from a data perspective. I've seen a lot of people out there being like, hey, the Fed's getting their data that they want to start embracing a cut. And I'm like,
are you smoking crack?
What do you mean? No, they're not. No, they're not. It's coming in.
You are literally smoking crack. Like, if that is
I
your
don't know
case.
About that. Okay.
You know?
People look at data a lot differently. But in terms of my estimation, like I just
so nice.
Well, I think
you're
there's
the
a
nice
lot of ways
brother.
To parse data. Let's just say
you're the good cop. You know, you go into the room and you butter them up, and you know.
I maybe, but I do think there's a lot of ways to parse data. But in terms of how I look at it, I don't see this as the reprieve that the market saw it as. The markets got what they wanted, a slight reprieve, but it doesn't change the overriding conversation. In fact, it gives me more confidence in my gold analysis.
Yeah, no, I mean, the title of the economic section in the newsletter this week was Soon Forgotten. And I think moved on, and you know, not a lot to see here, actually, you know.
Well, honestly, when you think about the economic data this week, how do you paint this as positive? Like seriously, you know? I'll wait. Somebody paint this as positive. You got inflation coming in at 0.3% month over month, 3.4% year over year. The month over month compounded equals 3.6% year over year. I don't know how you can argue that is a deflationary environment. We're extremely sticky around 3%. The PPI report shows pipeline inflation is going to be a problem for the stickiness of 3%. You get the Empire State Manufacturing Index contracting this week. You get retail sales getting basically butchered down to zero growth. You got concern on the consumer side of the equation. And if you look at the CPI report, we have a massive crisis in housing affordability right now that the Fed and the government has zero plan to actually combat. And so I struggle sometimes in understanding how some in the market can look at the data coming into the market this week and be like, oh, this is exactly what the Fed wanted. Well, if the Fed wants sticky inflation with an economy going down, we're going to have to re-embrace that stagflation comment that Powell made a couple weeks ago.
I don't see the stag or the inflation.
Do you see it?
I see the stag inflation all over up and down like, 4x.
Like seriously, outside of just sarcastic comments, do you see it now, pal? Like this week, do you see it now? You have zero growth in retail sales. You have contraction happening on the GDP side of the equation. You have industrial production that is showing negative contraction right now. And you got PPI report and the CPI report showing inflationary pressures. This data this week screams stagflation. And yet it was just 2 weeks ago where he made that horrific comment on stagflation, making fun of stagflation, when the data suggests even this week that's exactly what we're leading into. Powell's the leader. He's missing the beat on this one, the same way he missed the beat on the transitory conversation. He's opened up the floodgates of monetary conditions to the point where they are now as loose as they were before they started embracing 550 basis points in interest rate increases over the last 2 years. And I'm supposed to say congratulations to Jay Powell because the market hit an all-time high. Consumers going to have to be dealing with his horrific decisions for 30 years. But again, congratulations on the slight reprieve this week, pal.
Hey, I love it when you get all bearish froggy on me.
And not bearish.
Yeah, well, you know what I mean. You know what I mean. Like, when you're like, listen, the data says this. Markets can behave in all kinds of ways, right? Because right now, the only thing that matters to market is rate cuts, right? And this was a good rate cut week in the sense that you didn't get hot inflation and the economic data was bad, right? And that seems the markets have a funny way of caring about it until they care about something new.
Pray for the massive gaslighting over the next 3 months.
Yeah, it's an election year, bro. Yeah. but the Fed is completely independent of politics, so you can be assured that that's not going to influence their decision.
The Fed should not the Fed should not lower interest rates in any capacity this year. The Fed should be vigilant against their fight against inflation, and most likely, in my estimation, I would if we had Volcker would be raising interest rates. He would not care about the election. He would not care about anything. He would be raising interest rates until he had the market cornered in a deflationary environment so that we could get back down to some degree of normalcy. Powell, the powers that be in the government, there's something they don't want to risk, and I think we all know what it is.
Yep, I think we all know what it is. Listen, I mean, risk missing out on commodities if you don't do something right now, Matt. I mean, this commodity move lately has been what's the right word? It's beyond impressive because it has been it's not necessarily surprising. I'm trying to find the right word here. What do you think? Give me a word.
Surprising is definitely not the right word. We were all over that silver breakout of 29 and 30, and we dialed that one in for a while. So I'm not surprised by the precious metals market. I wrote about the gold silver ratio just 3 weeks ago, talking about how my expectation was silver is going to outproduce gold, and I absolutely love gold. It's my number one asset. So I'm not surprised by any of the precious metals move. I don't know what word you're looking for, but I do not
like it. Well, I guess what the word I'm looking for is maybe even intriguing now at this point, because nothing's been surprising. Is beyond interesting though because of the size and the duration. Like when I look at copper, in normal conditions, you would have just hung out with copper and you would have started to consolidate already, right? A big move, and then you consolidate. And then I had my base case strong at the start of the week that copper was going to start to consolidate, and copper said that would be incorrect, sir. We're going to make another move up. And I look at this chart in copper and I see a breakout in silver, and I'm like, that thing could have some serious legs, right? That thing could have some serious legs on that breakout of silver. What is your general take on a very froggy, exuberant environment in commodities right now?
I think silver plays general catch up against the backdrop of gold. Copper's already doing it as well. Palladium, platinum are starting to as well. Definitely check out Pete Thomas from a couple weeks ago because he was all over these conversations as well. My general take is I still believe silver's going to play catch up in terms of gold. I don't believe that means gold comes down. I think they both go up, but silver goes up at a higher percent in my estimation. I also think there's some scenarios where silver could test those all-time highs, and those all-time highs are up around that 49.50 level. And so you're entering into what I would describe as some open air for silver. I wouldn't be chasing market orders going into the early week. I'd be putting it on a watch list and waiting on the next patterns to develop because if this break is legit, which I do believe it is, we're going to get multiple patterns. You're going to get high bases. You're going to get flags. You're going to get pullbacks. You're going to get 9 testers. There's going to be a lot of different patterns that develop within a trend. And so I would, if you are not on that freight train yet, I wouldn't this is tough to chase. It just is from a trader's perspective. Wait for a snapback, wait for some degree of consolidation, and then look to pick it up on any degree of pullback either. So I do like silver, and I also want to one quick point here. I do think in general, GDX and the gold miners are also in that mode of playing catch-up mode as well. This is something we've been talking about for a very, very long time, quite frankly, with the gold miners having the ability to play catch-up against what's happening in the gold markets. And there's been a couple environments where, you know, gold did really, really, really well. The miners lagged behind it. And then as gold started getting into some degree of consolidation, the miners just started taking off. And now you got copper running, silver running, platinum, palladium, gold running. You got all of them running right now. And GDX is still at 36, now at 37.
You know, I think this is an important point to highlight because, you know, they're gold miners in the sense that that's where the primary revenue comes from. But in the course of mining, you mine a lot of minerals. And when you have a commodity complex exploding, it's not just gold carrying the sentiment here, is it?
No, it isn't. It certainly isn't. Now, gold's the biggest allocation in the miners, right? By a wide margin, you know, unless you're dealing with a specific copper like FCX or specific silver like Pan American Silver or something along those lines. But within GDX, it is primarily gold, but you do get those other industrial metal kickers within GDX.
Kickers is a good word for it.
Right? Yeah, and when you're looking at GDX, I'd look at it very similar to silver in the sense that there's a couple stocks. AEM comes to mind. Newmont Mining comes to mind that are setting up pretty decent within this space. AEM has a really good momentum, a little bit of a breakout happening on the daily chart. Weekly chart's just parabolic right now. AEM's actually one of the better trending gold stocks right now. And then you have Newmont Mining, which is, you know, going into a multiple time frame breakout on almost every single time frame, coming off reversal analysis. And so you can chase AEM if you're looking for the momentum trade, or you can look at a little bit of Newmont Mining or Barrick Gold if you're looking at more of a position style analysis. Or if you just don't know and you just want some space, then you got GDX. If you want to get silver specifically, you got SLV. And so there's a lot happening in the commodity space right now, but this momentum is really something to behold. And you don't get this type of momentum unless the market is believing that the powers that be and the Fed specifically is making some mistakes out there on the inflationary side of the equation. I think they are making mistakes right now. I think there's other people in the market thinking the Fed's making mistakes right now. And the precious metals environment, the industrial metals environment is starting to show its bullish horns here. So I'd have silver, gold, copper all on the radar for secondary patterns. Gold doesn't really need a secondary pattern, just needs to dial in an all-time breakout.
Yeah, I know. I mean, this is, you know, lots of reports in tackle trading community of a lot of all-time highs in people's trading accounts getting continually set. You know, it's a good stretch. It's a good environment. It's been a healthy environment, and there feels like there is. It feels like we got some rounds still to go.
Are you kidding me?
Yeah.
We still have the biggest round to go, and that's what I want people to understand here. And this is something that I think there's a very rich pattern on. We have not seen the environment which truly sends these commodity assets skyrocketing. The environment that
is mind-blowing.
But I
did get the word I want. But it is mind-blowing to think about, isn't it? Right?
Wait till the Fed starts cutting interest rates, guys, and the dollar and they increase the supply of the dollar. As the Fed cuts interest rates, you have lower threshold on the dollar. You start to see increasing supply on the dollar. As you start to see increasing supply on the dollar, that increasing supply drops the value of the dollar. Commodities and precious metals have to go up due to their divergent behavior against the pricing power of the dollar. And so when you're looking at those environments historically, take for example, 08. Everybody knows '08. And what happened to gold in '08? It went down. Despite '08 literally being one of the worst economic conditions, gold actually went down in '08. It was not until the Fed embraced quantitative easing and embraced lowering of interest rates radically where gold went parabolic. And the only thing that stopped this freight train was a massively, in my estimation, highly unethical decision by Jamie Dimon, who went and made an agreement with the powers that be at the Chicago Mercantile Exchange to radically alter the margin requirements on gold, silver, and copper ownership. And that was the only thing that stopped this parabolic uptrend. And by the way, you can go back to 1981 and you can go talk trading places, for crying out loud, but you can go back to 1981 and the great silver and gold boom out of the stagflationary environment of the 1970s when gold got reintroduced to the marketplace. That was the number one bullish condition in gold and silver. And yet what stopped that freight train? It wasn't anything under underlying economic conditions. The inflationary saga had not been completed yet. It was them massively raising margin requirements on gold and silver ownership that stopped that one as well. And so do I expect them to raise margin requirements at some point? Absolutely. But it is a true statement to suggest that we have not seen the environments where the precious metals and the industrial metals do their best. And the environment where they do their best is when the market is when they're going through a lowering of interest rates, putting money into the system, and then you start to see these start to kick off. What you're seeing right now is the inflationary saga driving these metals. Oh man, I can't imagine what can happen when the Fed starts cutting rates. Now, obviously, there's some front running of that going on, right? Because there's some anticipation of the market cutting rates. That's one of the reasons the market's at that all-time high. So that's obviously some anticipation. But in my estimation, Mark, there is zero ability to accurately price in that degree of expectation. So front running can happen, but I don't think that stops when the Fed actually starts embracing the cuts. So yeah, I want to get into the environment, and this can happen with a lot of new traders quite a bit, quite frankly, that if they miss that first move, and by the way, this is not silver's first move, it's its latest move. But they miss that trigger at 30, right? We talk about 29 and then they find it at 32 and they're like, oh, I can't do it. Don't make that mistake. There's patterns.
It's an easy mistake to make. It's an easy mistake to make. I've made it numerous times.
Disastrous mistake to make because the amount of things that you leave behind.
No, a disastrous mistake is buying GameStop at 75 this week.
Opportunity cost.
Buying GameStop at 75 on Tuesday was a disastrous mistake.
Well, I would never recommend anybody to do that. So
we'll talk about that in a second. But needless to say, if you are new to the Trading Justice podcast, welcome. But we've been talking about gold, precious metals for a long time. And check out that.
I might sound a little crabby right now on the.
You do sound crabby, actually.
I'm not crabby. I think the Fed's making some mistakes. Number one. But I have a lot of passion around these precious metal moves. Number two, there's a lot of rich history in this playing out. So I just want to make sure that everybody understands that these are opportunities that we're going to see multiple times over the course of the next little bit.
Yeah, no, and check out that podcast from 2 weeks ago with Pete Podcast. Ooh, that's a good name, Pete Podcast. But Pete Thomas. Check that out on an in-depth. Make some great calls in that podcast. You make money. Listen to this podcast. I promise you that. Not as exciting as some of these other areas, Matt, but oil has sure put in a good fight in the last couple weeks. Just impressive move. Both of you and I yesterday talked about oil amongst ourselves, and we're just like, man, just impressed with the price behavior. What do you see as we head into the coming week?
I'm definitely not surprised that the market is building support at 78. That is another day that ends in Y. You were right at the 200 daily moving average at 78, and you were right at your potential average yield, which is right around 6 points on crude oil to the downside right now. So that's from resistance to support. So, for example, you go from 87 down to 81, that's 6 points. You go from 84 down to the base of 78, that's 6 points. And so you move 6 points, then you move 6 points. That's yield, that's personalities and behaviors playing out over time. And so the combination of the 200 daily plus the yield, potential average yield conversation, not too surprised that we're finding support at 78. My anticipation, though, was another leg down, basically Elliott wave consistency, another wave down to the 200 weekly moving average, which does put the 200 weekly moving average right around 73 right now, which based on the current resistance level of 70, of right around 80, I'll give it that, 6-7 point movement, that'd be a 6 point movement down to 73, 74. That's kind of what I expected. And so I'm impressed here that,
yeah, so am I,
because it should have happened.
Yeah, both you and I expected this to happen. We both expected it to happen, just a little bit lower.
It tried to, right? I mean, the double wicks underneath the price action.
You broke support hard with fire on Wednesday, with fire.
And you did the Wednesday before that as well.
You had excuses. It was there. It was like you broke support, that no support, easy trip, and it said no. It said no.
Usually you see that as Saudi's got your back. What do you read that as right now?
I think my general feel on this, because oil is my favorite area. It has been for years, probably will be. It's not, I don't have very much exposure right now, but I love just the dynamics behind it. I think you are dealing with generally favorable backdrop of monetary policy conditions following the CPI, following Powell, and oil just made a stand there. It said, like, listen, everything else going great. You can try to send us down on nothing. You can try to short us on the same things that are sending other things up, and bears finally got smacked in their face. And once they got smacked in their face, they were done. For the rest of the week. The bears took their shot, they got smacked in the face, and then they were done. And then you head into this coming week. Bears, well, just look at the chart. You're not as froggy if you're a bear, right? And
I never really had a bearish, I never wanted to short crude or energy stocks themselves. I just wanted to let the downtrend play out more than anything. The ultimate question then, if that's your philosophy, that you just want to let this bear downtrend play out before you get back into some degree of bullish analysis, energy's had a breather, hasn't been a large part of the conversation in the last month or so. Crude oil's been a breather, has not been a large part of the conversation in the last month or so. We're starting to see that change a little bit now with the support build against the 200 daily versus what we anticipated with the 200 weekly. Energy here is breaking out of a symmetrical triangle, pretty clean symmetrical triangle as well. Doesn't have open air, but that's a really good look from an energy perspective. AR, Tackle 25 stock, just looks absolutely fantastic right now. One of my better calls in the Tackle 25.
Nice, fantastic call. Are you kidding me?
Yeah, it was a good one. There's no doubt about that. Pretty proud of that AR pick, actually.
You should, Matt. And if you are new to the podcast, Matt puts out a Tackle 25 list. The rest of us contribute about 5%. Matt does 95%. And, AR, he's done this several times over the year where you're like, out of all of the energy stocks, what is the energy stock I speaking from your perspective, going to say is a great value, Warren Buffett style value coming into the year. AR made the list this year for him, and that thing has just been a juggernaut this whole year.
It has been a juggernaut.
Even when energy was pulling back, AR said
it hasn't, and it looks pretty good right now, south of 35 as well. There were two companies that I put on the Tackle 25 in the energy space that were off the beaten path. like these are not massive big energy companies. They're a little bit lower market cap companies. One was AR, the second one was Range Resources. Both of them have had really good years so far. I certainly would put AR above Range, but Range Resources has a pretty good trigger itself right now against an all-time high at 38. So both companies, I don't regret either one of those companies, but AR is my favorite of those two.
Yeah, no, it's well done. So oil, listen, I did a little bit of bullish cash flow for the first time on oil to end the week.
On the naked put?
I actually added oil and smashed
smash some cash flow on the
smashed some cash flow. So basically saying basically a bet that oil doesn't go down. Just said, all right, smash some weekly cash flow. I liked what I saw, but I am in energy stocks themselves, which I own zero of heading into the week. I'll though by the end of the week, I doubt that's the case. I bet you I have something token in the space because it's good look.
It is a good look, and the only thing I would add to the energy conversation is symmetrical triangles can be difficult in terms of the volatility and what does occur. I'm not the biggest fan of symmetrical triangles, but this energy one's pretty clean. The overhead
extremely clean.
It's pretty clean. The overhead is 96, and so you could see a scenario where you get back up into 96 base and then break 96, and that would be a really good setup as well, similar to what iBit is going through, quite frankly, right now. A different type of triangle, but when you're looking at Bitcoin and when you're looking at iBit, I don't know if you're ready to transition there, Chucky.
Dude, listen, you knew I was. Dude, you and I have done these shows so many times together in these podcasts. We know when there is a natural transition into the next subject.
They both have very similar technical edges right now. Obviously, different patterns. You have a little bit of wide range neutrality on Bitcoin with the reversal at the low point of that wide range neutrality versus a symmetrical triangle, but both of them have continuation fill to it. The triangle is more of the important part of the conversation because Bitcoin broke through that triangle on that downtrend triangle on I want to say Wednesday of this week. When you're looking at some of the other ones in energy, they broke through that triangle on Friday of this week. Well, Bitcoin now got back up into that overhead, and we liked it enough to put it on the traders report this week for the first time in a while. And so that's kind of that setup that I was talking about with the energy backdrop is when you do break through that triangle, that's a good trigger signal. There's no doubt about that. That is a bullish confirmation signal, but it oftentimes in triangles, if you just be a little bit patient, you can actually get a higher probability threshold, maybe not the same reward to risk ratio, but a higher probability threshold if you wait for it to get back up into that overhead. And on energy, that overhead would be 96. And on the iBit, that overhead is 38. So I like them both in terms of, but that is my preferred method in looking at symmetrical triangle is to not take the break of the triangle, but to wait till it gets into that first pivot. And then once it breaks that first pivot point, then it looks really, really good from an open air perspective. So a lot of different ways you can approach triangles, but I just wanted to take a moment to describe it.
Yeah, no, the biggest thing that stands out to me in preparing for this podcast and discussing this, I got a lot of choice and I got a lot of areas of the market to play this week and probably the coming weeks, right? I got healthy patterns developing in a variety of things, right? Not just individual stocks, but areas of the market, Bitcoin, oil, precious metals.
There's so much out there to look
There's a lot out there. And so those type of environments tend to be really, really favorable for traders because you don't feel like you're pushing it on anything. You got choice. Oh, silver's overextended. I can wait a few days because I got something else going on, right? Type situation.
Well, that's what I love about this environment, though, when especially for people that tackle trading that do anchor against the commodity space a little bit more than other trading communities do, I would say, not quite a bit more, I would say. When the commodities are roaring, it's easier to have patience play out in pattern development, because while one pattern is playing out, we can go look at the other one, and it's easy to be patient in those environments.
Oh, and that's the
versus
thing.
environments where nothing's really working out and you want to force your willpower on something.
Because we're traders, we like to do stuff even if it's light, right? I mean, that's just
we like to force our action. Yeah.
But like this is one of these environments where I'm like, oh, yeah, well, I got a lot of choice, and choice usually leads to good decision making. Good decision making tends to lead to more profits. It's so funny.
I'll tell you, in the scanner report meeting this week, Mark, we had between Frank, myself, Gino, Greg, I think we had about 90 clean technical patterns on the bull side.
Yeah, it was it's a good list.
Well, the thing about it is there were 90 legitimate good technical patterns. And what we do in that trader report, and we basically merge the stock and the option report into the traders report. And in the traders report, basically we put together the best watch list out there going into this week. And sometimes, you look at the list and you're like, oh man, don't love the list this week, right? Don't love the selection this week, whatever the case might be. This week, on both the bull and the bear side, there are clean setups out there right now.
Yeah, let's
in almost every area of the market too. We're talking the difference in commodities versus the stock market. You see that same play out from a sector perspective as well.
Yeah, no, the choice is a good thing. I'm pretty happy heading into the week. I won't lie, but I don't own GameStop, Matt. So that will depend on your trading, and I don't want to bash GameStop too much because you and I both support.
I will. I will. But are you kidding me? They issued 45 million shares after some pump and dump scheme was happening with Roaring Kitty.
But before you get
this is a massive cautionary tale.
Well, yes, and you and I. Okay, let's back up 2 steps.
That Roaring Kitty comes back on a week where
I should have done this transition smoother because I should have known my brother.
45 million shares. You might as well have. All right,
let's tell the story. Saying,
let me still retail's money.
Let's tell the story before we get in.
I'm sorry.
I know, my God, like keeping you in line in this podcast is a full-time job for me today.
I'm telling you, the Fed's got me on edge.
All right, you ready? Are you calm? Take a deep breath.
No, I've wanted a soapbox for a while, and
I'm gonna give a Reader's Digest. Yes, I'm a 53-year-old man. I'm going to reference Reader's Digest version of GameStop. Right, a few years ago, post-pandemic, there was a massive short squeeze on GameStop. You likely all know about it. So that's the backdrop. Roaring Kitty was kind of the general leader of that on the Reddit message boards. He highlighted the case for a short squeeze. He was correct. It created, a movie based on it. It's a famous episode in market history. It will go down as a famous episode in market history. Well, on Monday, it was Monday that he did this. It was Monday. Roaring Kitty, the person that first pointed out this short squeeze, Keith Gill is his name, if I remember correctly. He had been dormant for a few years, had not been active on social media, had not been active on Reddit, and he made a cryptic post that showed him sitting in a chair, or supposedly him sitting up.
Are we certain it was him?
Well, it was a man in a chair sitting up as if they were all of a sudden paying
Very
attention.
Very cryptic.
Not a lot of meaning. Now, it wouldn't be not so cryptic in the, 100 tweets and social media messages he would post throughout the week trying to rally the troops. But that started a massive short squeeze on GameStop on Monday, and pick it up from there, Matt.
if there was any coordination of Keith Gill buying out of the money call options and any degree of coordination to create this environment this week, I think there should be investigations, honestly. I also think there should be investigations on GameStop and on AMC for their issuance of debt and their issuance of new shares to take advantage of the higher prices this week. I think there are some unethical things going on right now in this saga, and the retail is going to hold the bag on it the same way they did this week and the same way they did last time we went through this. And I feel very passionate about this because I think it's part of our jobs to make sure that our community understands these cautionary tales in the marketplace that they don't get caught up in, because they can be extremely, extremely dangerous to participate in. And basically a lot of traders, they look at options and they like to buy call options in these environments, or some traders like to sell options. And the simple reality is these environments are far too volatile to buy options because the premiums go up too much, and they're far too risky to sell options because the risk and the exposure you have on the downside is just ridiculously high as well. I am certain there were people that probably went bankrupt in this environment this week. And I highly doubt it was the Melvin Capitals of the world this time. I highly doubt it was the Citadels of the world this time. And so whether they were doing the first story that led to the movie Dumb Money, I thought was absolutely fascinating. In the retail saga, taking on the big dog Melvin Capital, the big dog Citadel.
It was organic. That's why you loved it.
Who was the most unethical organization in the market? I would make a strong argument for Ken Griffin and Citadel, quite frankly. But in terms of that first storyline, it was David versus Goliath. How do you not cheer on
and
David?
Matt, it was organic.
It was. It
happened.
There was nothing organic about this story.
Not at all.
There was out of the money call options being purchased in front of it. There was cryptic messages and coordinated efforts to get the information out there to the marketplace. And then immediately upon the volatility kick in, AMC was pre-planned to release to take advantage of it with new debt issuances to allow them to refinance some of their debt. That's a bankrupt company being able to do that. And GameStop issues 45 million more shares just to take advantage of the increased interest in the marketplace. I'm sure they're going to give big time bonuses over there at GameStop and try to crawl out of their debt-driven horrible company that is called AMC. So I don't see this as the David versus Goliath.
Not at all. It's not this time.
2.0 this time. I see this as a coordinated effort. And if Keith Gill did coordinate this and did it solely to get his out of the money call options getting pumped up, which I don't know if that's true or not. I just read a story on it. A lot of speculation here, obviously. I'm sorry, I don't see that as David versus Goliath if you're buying out of the money call options and then coordinating a pump and dump scheme. I don't see that as David versus Goliath. I see that as an extreme cautionary tale and tackle trading. And this is kind of how I summarized it at the end of the newsletter here this week, is I basically just stated, at tackle trading, we cheer on the little guy and we appreciate the narrative of Main Street taking on Wall Street hedge funds. I don't see that being the case this week. I said, however, the extreme volatility seen in meme stocks is a wild ride that's too hot to handle for most of us. While it's thrilling to watch, it often comes with high risk. We prefer to watch the spectacle from the sidelines, popcorn in hand. So I just think it's a cautionary tale, honestly. And I thought the first episode was David versus Goliath. Like I said, I thought it was an inspirational story of retail taking on Main Street taking on Wall Street. That's something I'll always support. I'm a populist at my heart. I'm an educator. I've spent my career trying to educate people to make sure that they can, take advantage and take control of their financial lives from Wall Street. So I really appreciated that first go around, but I didn't see the commonality of this one. I saw more unethical behavior on both sides of the equation.
Yeah, no, it's it wasn't exactly it wasn't exactly Godfather to the sequel.
GameStop and AMC were very prepared this week.
So were short sellers.
I'm just throwing it out there. If there was completely unknown, how were these companies so stinking prepared this week?
You know, like, and it just is a terrible sequel. And then you are going to have, and this is why you're fired up. At the end of the day, you're fired up because gullible individuals that do not have education got whacked this week, chasing it.
That is what bothers me. Yeah,
and I know it is, because at the end of the day, real lives were impacted.
I've spent a career trying to.
Well, Matt, you're a populist. I'm a populist. And what happened is you had a few individuals coordinating it that might have benefited it, and that came at the expense of a lot of people.
The select few, wherever they be, decided to take advantage of the majority. And I just find that is not what these markets are designed to be. And my hope is that's not what they're going to be in the future. I think the SEC needs to come in here and investigate this one immediately.
Yeah, I know. It's just
at every level, mind you, at every level.
You know, it's just a bad sequel. I mean, this wasn't.
There's no good people to cheer on in this saga right now.
No, there's not.
You want to cheer on Keith Gill? Roaring Kitty, should we cheer on Roaring Kitty because he bought out of the money call options and then got a gift of the trading gods by putting out a cryptic message to get people to pump it?
And then throughout the week attempted to rally the troops to benefit his position. Right? Like, where's the Melvin Capital we're fighting this time? There's no, like,
this is just some trader trying to use the system to get greedy. Like, yeah, that's all it is.
That's all this is. And, you know,
whatever good he created in terms of that populist message, I'm sorry, at least in my estimation,
in my book
this week.
Yeah. You know, and so, you know, just listen, there are so many ways to make money in the market. And if you try to do it overnight, instant riches, that usually doesn't work out.
Well, you know, give it 2 years, they'll do it again. The exact same thing.
I don't know if there will be a trilogy.
Why not? Are you kidding me?
No.
Do you not think that some in the market have figured this now out? That all you have to do is buy out of the money call options, load up, get the populace to embrace something, pump it up.
Oh, yeah. So with something else, not on GameStop, though. Yes. Like, you know.
Oh, I think it'll happen on GameStop. I think it'll happen on the memes. You think people don't wise up to this stuff in the immediacy. It takes an Enron type level for people to start breaking that dynamic between the greed and what they could be doing in the marketplace. So I think you'll see a few sequels to this, and that's why I think you need to see the SEC come in here and investigate.
Well, you know, it is a chapter in market history, not much of a follow-up on that chapter, but certainly, you know, you'd be remiss if you didn't talk about it.
It was a major market story this week. It was probably got more headlines than any other market story this week, including the CPI report, shockingly. That's sad, but it did occur. Again, we'll see how this one plays out. I think at the end of the day, I think it's a big cautionary tale for us at Tackle Trading and in the trading justice community that there are far better ways to make money than taking a shot in the dark on GameStop.
I know it's a good feeling being at all-time highs on a Friday. You know, slow, steady. Listen, come join Tackle Trading. We got a great community. We'll get you to where you want to be. It won't be overnight without the money call options, but we'll get you to where you want to be. Well, Matt, that's all the notes I have on my end. Anything else you want to touch about before we call it a podcast?
No, I touched on all the topics I wanted to discuss here today. Obviously, a couple of big news stories coming down the road a little bit. I think the most important equation coming into next week is the combination of navigating the market all-time breakout in conjunction with what happens with Nvidia on Wednesday night. I think that the next 3 trading sessions are going to play a really big role in whether or not we see development of continuation patterns or whether or not we see the continuation of momentum, the early stages of a momentum trend. And so I do think the first 3 days, I think you got to discount price action in the first 3 days because, again, that NVIDIA report, it's an all eyes moment. It is. There's no doubt about that. And so couple days of consolidation goes a long way. Let's see what happens with Nvidia's price action following Wednesday. And again, Nvidia is not just a technology type conversation. It's not just an AI conversation. Nvidia is the #1 company that has impacted the blended growth rate over the last year, and certainly right now as well. It's more important than Apple. It's more important than Microsoft. It's more important than all of the Mag 7 and the generals. That's how important NVIDIA's report is.
It just
because,
is.
again, it has that big of an impact on the growth side of the equation. So it's an NVIDIA moment this week. But outside of that, it's I do think we should take a moment to celebrate an all-time high closing price on the S&P 500. It's been a really good trend in the last couple weeks. It's been some really good price action. I kind of feel like we did our job with the 5K holding and making sure our entire community understood the importance of that 5K holding and what was going to happen after that. And now I think the ultimate conclusion is, let's see what patterns we get at the all-time high.
Yeah, I know. I mean, it feels like a patterns certainly play market, whether it's oil, silver, gold, uranium, your favorite stock, a sector, the market itself, and following those patterns and then hitting those patterns. I think that's a rinse and repeat formula right now. And so we'll help break down those patterns in our traders report each week. We'll do that with our pro community throughout the week. But thank you for listening to the podcast. We always enjoy it. And if you see Matt walking down the street, don't bring up the Fed or Keith Gill.
They're thin ice.
Just limit it to a, how you doing, Matt? Are you having a great day?
I'm having I'm in. See, the thing is, I'm in a fantastic mood. I'm in a fantastic mood. We upgraded the market. We got an all-time high. Gold's pumping, silver's pumping, copper's pumping. Bitcoin got IBIT breaking out to that 38 right now. I mean, it's a fantastic world in the financial markets right now. But those two topics, I got some opinions on. There's no doubt about it.
All right, everyone, have a fantastic week.
Later, team.